Good morning. Welcome to RE Journals Memphis. I'm Todd Phillips. I'm the host of Power 30. I'm actually not in the Power Studio. The Power Studio is located in Florida today. I'm going to do a screen share real quick, and I'm almost 50, so this takes a minute. Hold tight. There we go. Hopefully you're seeing that. This is our event today, Midwest Real Estate News, 2020 Memphis Commercial Real Estate Summit. And it's not moving for me, so that's super fun. There we go. Here's our sponsor. So I say this, I feel like I've said this 100 times. I'm a broken record. This is our 121st, I believe, online event since COVID hit. We've had to pivot. It's been a challenge. We're a live event company and we're a publisher. We much prefer to be in person, but we've kind of figured this out. We're thankful all of you did with us, but we wouldn't have been able to do it without sponsors. So cost segregation, CSSI folks, thanks for sponsoring. Avison Young, Right Size, Corfac, and Valbridge. I want to show you real quick another screen share, so just hold tight. Let me just make sure we get to all these slides. This is us. We've got to do a pitch. RA Journals, we're 6 publications, 17 states. We've done over 200 events this year. We'll do 150 next year because we're going to cut down on some of these webinars, hopefully doing more live stuff. This is our panel, but before that, I want to do a different screen share, so hold tight. This is pretty cool, something we started doing a month ago. This is our virtual lobby. Since we can't get together and have a real lobby, we built a virtual one. But here's where you can find out information about all of our speakers. And I'm gonna scroll down a little bit. You can see Caren, our awesome moderator, is ready to rock and roll. There's her photo. But below that, you can see the little LinkedIn button. If you hover over it, it turns red. Click there. That's where you can find the folks' bio and also connect with them on LinkedIn. Because look, if we can't get together in person, the least is use the social media. Here's the agenda that they're going to talk about. If you want to know more about our sponsors, here's sort of our virtual booth. You can go in there and learn a little bit more about them. But enough about me, enough about RE Journals. Let's get this show started. Caren, are you ready to rock and roll?
We are ready.
All right. I'll be here in the background. Good luck.
Good. Thank you very much. Thank you to Midwest Real Estate News for having us all. We're going to start. I'm an attorney at Evans Petree in Memphis. I work across the state. We do property tax work for commercial properties. And I'm going to start by letting each of the panel members introduce themselves. I'm looking at the screen, so I'm going to go around the screen, and I'm going to start with Todd since he's to my right on the screen.
I'm Todd Glidewell. I'm the Senior Managing Director of the Valbridge Property Advisors Office here in Memphis. I've been a commercial property appraiser for about 34 years. I've been an investor in multifamily, retail, office, and other properties for about 20 years. We do all kinds of commercial, industrial, multifamily appraisals throughout the Memphis MSA, and that pretty much covers it.
And he's a good appraiser. I've actually
a darn good one, a really good one.
I'm your endorser today, Todd. Okay, Jeb, why don't you go next?
Thanks, Caren. Jeb Fields with Commercial Advisors in Memphis. We're the local Cushman and Wakefield affiliate. I've been in the business about 17 years, mainly focused on tenant representation of companies in both industrial and office product. Also do some portfolio management, really anything that our clients request of us, we try to handle from their real estate perspective. Thanks for having me.
Great. Shane?
Yeah, Shane Soefker. I'm a principal with Avison Young in the Memphis office. I focus primarily on capital markets, and I also lead our investor services initiative as well, which is capital markets and our landlord work. So I've been in the business for longer than I care to mention, probably 25 years. A good chunk of it in Memphis, a good chunk of it in the state of Florida, and that's about it.
Okay. Shawn, you're on mute, but you're up next. There you go.
Oh, turn on mute. Turn on mute. Shawn Massey. I'm a partner with the Shopping Center Group here in Memphis. I've been with the Shopping Center Group 18 years, and I keep not telling our new name. It's TSCG, formerly the Shopping Center Group. I specialize in retail and hospitality. I'm also a professor at the University of Memphis in the master's program, teaching real estate investment and development and That's a quick introduction.
Great, thanks, Shawn. So let's start by talking about the office market. As we all sit here, I can tell from all of us, we're at home, except for me. I think I'm the only one in the actual office today. But Jeb, if you would start by talking about what's going on currently with owners and occupiers, their current needs with COVID, but also just generally what their concerns are and what they're dealing with.
So right now, I think it's best described as we're still trying to figure this out. Like the pandemic hit everybody, it touched every facet of life, and everybody's trying to figure out how to get what it means, how to get beyond it. Office is not, it hasn't flown above that fray. What does it mean for the future of office? Currently, occupiers are trying to make a decision of whether or not to go ahead and downsize and extend, or just extend and remain in this about the same square footage and kind of wait for the pandemic to burn out, which it looks like we are getting close to that, fingers crossed, with the vaccine. So there's a lot of questions. I think it's certainly innovation is going to come out of this. Like most other trying times, innovation always comes out of these. And I think the way people office, what's important to an office is going to change coming out of this. The big question is how much utilization will be needed, how much square footage, how much demand for office space will be in the post-COVID world. Hopefully we'll experience that in another 12 months or so.
And Shane, what are you seeing from owner's standpoint on those type of issues?
It's kind of the same thing as Jeb just described. I mean, the theme seems to be uncertainty and delayed commitments. I think for the most part, particularly with some of the larger employers, they're kind of kicking the can down the road. I think everyone's kind of hit the pause button to sort of reassess their needs, what their near-term and long-term sort of space utilization needs are. I think for us, particularly from the landlord, sort of side of things, I think, and Jeb kind of touched point on it, with the innovation. I mean, it's what is the future of office space going to look like? We're just coming out of this sort of, densification sort of trend in the office space, and I think going forward with the spatial, requirements. I think it's going to have a pretty substantial reversing trend on some of that densification. But it's too early to tell, honestly, because I think there are just too many people out there trying to figure out what it all means.
Okay, so this kind of leads me into my next question of where demand is coming from here in Memphis. But what we're seeing and hearing from clients that have offices in larger markets is that they are really either scaling down or looking for satellite offices if their leases are coming up. Are we seeing any of that here with large tenants? Are we being the beneficiary of any of that? Jeb, tell me what you've seen, if you have, as repercussions of people looking to spread out some more, or maybe go from larger cities to smaller cities.
The big corporates have not returned to the office yet, officially. Our big corporate citizens, FedEx, IP, AutoZone, and others, they're largely ServiceMaster. They're largely still stay at home. There's some trickling back in. Haven't seen movement from larger cities into Memphis. It's mainly organic growth or organic movement with current corporations and companies within the city. To Shane's point, the densification trend, I think if we can bet on anything on the office market going forward, that densification trend is probably going to reverse itself, and it's going to start to go the other way. you know, it's Cushman is working with George Washington University and putting together a multi-part series on office space. It's called The Purpose of Place. And there's some pretty interesting findings that they're coming out of through studies that they're doing with interviews, companies, corporations, clients. And it seems like it's trending toward the satellite focus, the kind of a hybrid model, the industry specific remote work, and it's not going to be 100% remote work. There's just too much that happens within an office environment, from collaboration to mentoring to just the inspiration of ideas that we get via physical interaction, that it's starting to manifest now that we've been out of the office place for an extended period of time. That's starting to show up, as opposed to the first couple of months when everybody was stay at home. I think everybody soldiered on and kind of figured out, you know, we're in this together. You know, people are wanting to connect with their colleagues, and it's harder to do that in this format that we're in right now.
Shane, what do you think about where demand might be coming from and the impact that this is having?
Yeah, you know, it's interesting. We saw this, you know, after 9/11 when, all these back office operations ended up in Texas and Florida, and really kind of, it was more of a, you know, sort of reduce their exposure in concentrated areas and more of a hub and spoke sort of concept. But there was also kind of the quality of life play as well. You know, we're seeing this already, you know, as people sort of, companies leave the state of California, New York. It's mainly for tax reasons and other quality of life issues. But, you know, I think that what's going to be interesting, and we're seeing it already in the city of Memphis. There are a number of different users that we're familiar with, that we know well, that we know they are consolidating into Florida and or Texas and or other states. And part of that is, you know, kind of driven by, you know, it could be incentives, it could be, you know, just a better way of maximizing the efficiency of an organization. I mean, there are all kinds of reasons why they would relocate away from Memphis. And so I think that's probably the biggest thing that Memphis has at risk right now in the office space is, you know, sort of that consolidation, you know, with some of these larger organizations. And, you know, unfortunately, Memphis, you know, being the, having those people leave the market like this. I think that, you know, the office space is far from dead. I mean, I think, you know, you can read into, everyone likes to jump to these conclusions and sort of diagnose an illness before it really ever, you know, gets there. But, you know, I think we're entering into a new exciting period. I mean, I think that, as Jeb and I have both been talking about, I mean, I think that with the social distancing in the office space, moving away from this densification sort of trend, you know, we do realize, and I think everyone acknowledges that certain companies are going to have a work from home sort of policy. It may not be 5 days a week. It could be some variation of a handful of days at home, a handful of days per week in the office. But I think that, you know, the evolution of office or the workplace is starting to happen. And I think those changes are so, you know, unique to all the individual organizations, whether it's meeting spaces or common areas, or, you know, you got to find a way to engage all these employees. And hopefully with the social distancing and some of the work from home, you know, I think we're all hopeful that it's kind of a, you know, a zero-sum game, or there's kind of this net neutral impact to office demand in the market and everywhere else as well. But it will be interesting to see how it all plays out.
So, you know, it's funny because we here, everybody knows I'm the one who wants everybody back. We work as a team, and I miss having everybody here. I think that we miss that organic ability, as we talk water cooler talk earlier, just to exchange those ideas. So I personally miss having everybody in the office. You know, a lot of people have been saying that the trend has been, and I'm interested, Jeb, if you've seen this, that really the people who don't want to come back to the office are the younger people, that they like working at home in their pajamas. And I'm just wondering if you have heard any of that, and if there is a concern long-term that those 35 to 45-year-olds are getting super used to working from home and really like it and might not really want to come back to an office setting.
You know,
You're closer to that age than
I wish I
am,
was still in that age group, but I'm not. I can speak for our 35 to 45-year-olds in our office. And I think they like the ability to flex. They do like the ability, they want the place of an office to come to for certain tasks, but they also like the flexibility of a remote work option. You know, those that are in the very beginning of the career, those that want to, I'm speculating, but you know, one of the things that's really lost in the remote work is if you have a team and you have, if you're trying to learn an industry and you have a mentor, that's really hard to do when everybody's spread out. So I think those that have a thirst for the knowledge and want to aspire to improve will seek out those opportunities of engagement, personal engagement. It may be in the office, that's where it happens most organically and often, but it may be also let's meet at a remote workplace and work together at that location. So I haven't really heard, at least in our team, a lot of people sitting around saying we'd much rather be at home in our PJs. But in fact, many have often, we've had a couple that have said, look, I want to get back to the office. You know, I need some days to get back to the office, you know. And our office has been open since June 1, and we've been technically open since June 1, but we said, look, if you're uncomfortable coming in, or if you want to, you know, come in some days and not, then we've been pretty flexible with our people.
Shane, if you want to take that one. Also, I want to hear kind of about, between either one of you, about whether you've seen anybody, because of the need of social distancing, actually looking for more space, like those trading floors and things like that. Go ahead, Shane.
Yeah, as far as kind of the you know, sort of employees, we have 3 very distinct employees in our office. The younger crowd that if you let them work from home, they will work from home. And you know, we're kind of a little bit of an anti-corporate sort of, you know, environment where at AY and the Memphis office in particular. But you know, so we have a very flexible workplace. And so, you know, we have all of our younger employees will work from home 5 days a week if we wanted, if we let them. But we are sort of encouraging to come back in. Then we have the other sort of the middle-aged, you know, sort of group that have, where they might have kids at home, or they have a spouse working at home. And so they got to get out of the office so they can get out of the home, back to the office so they can get some things done. And then we have the older sort of demographic that are creatures of habit, and they're used to waking up in the morning and going to the office and doing, you know, everything. I think that to the second part of your question, Caren, we haven't seen anybody right now making decisions about increased, you know, I think that's probably another sector that we're going to talk about next. But I think on the office space, we haven't seen anybody that kind of falls in that category. I mean, I think everyone's sort of assessing their needs. And I don't think that even if they had an immediate need for more space, at this point in time, they're doing anything about it. I think they're all kind of riding this wave out. They're going to wait till 2021, see what happens. And then ultimately down the road, they're going to make a decision if there are expansion needs. And then really nobody needs to do it really anyway, because everyone's working from home. But Jeb, I don't know if you see it differently, but.
I don't think that those decisions are being made just yet. I think still a lot of people are trying to figure it out.
Yep.
Frankly, you know, what's the right mix of remote and office work, of the office work, what's the correct square feet per employee that's needed. Do you go to a hoteling option where, you know, there's really no assigned desk? You you come in, maybe you're, you're Monday, Wednesday, Friday, you have another colleague that's Tuesday, Thursday, and you rotate, flip flop that on a weekly basis. So all those questions are being kind of asked right now, and I really don't know anyone really has a good handle on it yet. It's just it's a very everybody's still trying to figure out the temperature of the water and whether or not they want to jump in.
But I still think there's a strong need for social interaction, and I think that's pulling people back into the workplace. As Jeb was saying, we have staggered schedules for a lot of our people as well. I mean, our essentials, property management side of the business has been in the office since day one. They've had staggered schedules. We just recently went back to a staggered schedule with them and reduced office occupancy with all the new cases or the surge and in COVID here recently. But, I mean, you cannot replace, particularly with new and or younger employees, being close to seniors, brokers, and other senior people in the business, because, it reduces the amount of training that you have to do. They just pick up things being close to people, and you have that collision effect where you share ideas. I think, everyone's taking this opportunity to kind of reassess their space needs. I think also you have a lot of companies that are taking advantage of sort of reducing their overhead, a little bit of the burn with all the uncertainty in the economy out there. But I think as we get into 2021 and we have another round of stimulus and we get the vaccine out there, I think people are going to start moving back to the office.
And before we leave office and move to industrial, Todd, I wanted to see if we've had some transactions and office buildings actually closing here in Memphis during COVID. What do you see? Give us a cap rate ideas of what you've seen and going forward, how you think that will be impacted.
Well, I mean, it's the valuation side of all this is very difficult because there is a lot of uncertainty out there, and the more people we talk to, the more opinions you get about where this is going to play out. There were some major transactions that were underway prior to COVID. Those got to the finish line. I think most owners are going to try to work through this. We haven't seen a lot of rent deferment or concessions in the office side. We are looking at each property case by case. We look at remaining lease terms. We're talking to tenants, owners, and to get a feel of what the cash flow is going to be like near term, and hopefully we can get a grasp of what's going to happen beyond this. We're not seeing a lot of uptick in cap rates, but we do feel that there's some uncertainty in the office side. And until we get past this, we are injecting a little bit of risk in our cap rates. We can't pull a cap rate from a 19 sale and apply that to today's world. We're adding anywhere from 25 to 100 basis points to that cap rate, depending on the property in question.
And are you seeing lender hesitancy at all on the office side?
Not really. We haven't seen any pullback. There is some kicking the can down the road, I think, on some properties, but for the most part, office has I think rents have been continue to be paid based upon what we're hearing on the streets, and the owners that we talk to, we're not seeing a lot of tenants that aren't able to pay their rent, and that's the key. So I hate to, I sound like a broken record. It's really a case by case. We look at each property, we look at their tenant mix, and we try to get the best feel for where things are. Remaining lease term, there are tenants signing renewals. They're obviously trying to maybe look at a more short term to fill this out, but for the most part, I've been surprised to see office hold its own. But we can't ignore the fact that there's some uncertainty, and we're putting that into our cap rates.
Okay, let's move, because we're getting there on time, onto industrial. And Shane, you want to start first with this one. Tell us about what Memphis has been such a strong industrial market. Tell us what you're seeing now on the industrial side, because we flipped from office where people have been hesitant to, I think, industrial where people have been much happier.
I mean, it really is a tale of two cities, really. I mean, that, they couldn't be, the trajectory in which our industrial market has been moving has been, phenomenal. I mean, industrial has, and this is not only in Memphis, across the country. I mean, it's outperformed every single, commercial product type and residential product type as well. And it's been mostly due to the surge in e-commerce. The shelter in place has been, sort of had a huge impact on the changes in the way that consumers buy things, and obviously the reaction from retailers and distributors has been just phenomenal. I mean, but many of the commercial real estate prognosticators will tell you industrial properties are going to be best suited to weather the storm going forward. We've seen that firsthand. There are a number of different sort of trends going on in this market, and development is one of them. We could talk about that in a little bit more detail in a minute, but it honestly, in the brokerage community, the people that have had exposure to the industrial markets have done very well this year. We hear this from brokers, other companies, it could be very well one of the best years that Memphis has ever had from an industrial standpoint.
Jeb, what are you seeing from your end of things?
Everything's coming up roses in industrial. I mean, Memphis is tried and true industrial market. We're all, being local, we understand that, we know that. Going back even to the depths of the recession, I would talk to asset managers and they said the only place I would have anything going in the entire US would be in Memphis. And we have good product, we have lower rental rates, and we have excellent logistics capabilities. All of that just supercharges an environment like this where e-com has really started driving a lot of the product. It's really the proving grounds for e-commerce, and Memphis stands to be a huge benefit to it. Also, just your distributors and warehousers outside of e-com, they're gonna matriculate to Memphis because we have such a good, solid infrastructure. It's like Shane said, it's a tale of two cities for sure. And obviously FedEx and the hub is a key component of that, but our intermodal capabilities is huge. Just we're blessed by geography and the intersection of the two major North American interstates, I-55 and I-40. All of that combines, and with our proximity to a large percentage of the U.S. population, all of that combines to just an excellent place to distribute from, and people are needing that and requiring that to get their goods and products to the residences, even more so than before. And it's hard to find a dark spot in industrial. I don't. Todd may have something hiding, but I can't think of one really.
Shane, tell me more about the effects of e-commerce and fulfillment centers and how we've dealt with that here in Memphis.
Yeah, I mean, again, there's so much research out there with this, but again, Moody's report and COVID-19's accelerated the e-commerce penetration in all these markets by 4 years. I think that what they're all saying right now is for every $1 billion in sales and retail sales, there's a need for about 1.25 million square feet of additional space. And so it's honestly, the amount of demand, either whether it's from a supply chain or it's from a reverse logistics, because that has such an equal sort of impact. The amount of demand out there in the market has been kind of shown and demonstrated through the amount of development that we've seen in this market as well. I mean, we have just a massive amount of development, almost 16 million square feet that's currently under development. A good chunk of that's build to suit, a good chunk of it's spec. I don't think the Memphis market's ever seen anything over, 11 million square feet in the market at any given point in time. And the Memphis market's always been a good spec development market. I mean, you've got, the Hillwood guys, IDI, Panettone, Core 5, Huntington, Robinson Weeks, all of these developers are in this market developing right now. And although I think, 2021 might be a little bit more balanced from a supply demand standpoint, because it's got to slow down at some point. I mean, it just, it can't, maintain this pace. But the thing that's been so amazing is the amount of new development that started the second half of 2020. I mean, the first quarter was a continuation of 19, but the second quarter of 2020, I mean, everything stopped. Whether pick a product type, everything stopped. And so a lot of this activity has really been sort of just recent, but it's a positive sign in our market, and it just demonstrates the amount of interest from an institutional standpoint or developer standpoint, which I think is really good for the Memphis market.
We just had a question come in that I saw that popped up that dealt with DeSoto County. And I know a couple of years ago, we were all kind of lamenting the issue of so much of the industrial development moving down to DeSoto County. Talk a little bit about that. I'll let either Jeb or Shane, whoever wants to take that one, run with it.
Jeb, I'll defer to you.
Sure. That has been a huge trend past 10, 15 years, although that trend seems to be ebbing a little bit. It's still strong, but there's more developers coming back into the city of Memphis. Part of what drove that demand, that trend, and into Mississippi, DeSoto County, is because they had large tracts of land available. So the big developers, Hillwood, Panettone, Core 5, IDI, they want to buy a couple hundred acres and build out 4 or 5 million feet. What was left in the industrial expansion in Memphis and Shelby County was 100 acres here, 80 acres there, 60 acres there. But now what you're seeing is some developers like Robinson Weeks, TPA Group, coming in and backfilling, doing some infill development into the Memphis proper. If there's a big building in Memphis proper, it gets leased, and I think some developers have seen that, and they've all of those companies that I mentioned are having some success with that. There's a war for labor that I think is only going to increase as we come out of this in the post-COVID era, and then also just the proximity to population and the ability to get goods to market and shorter drayage times and all of that will play into that. And that's what's going into a lot of this, call it infill development in industrial. Not to say that they aren't still buying large tracts of land and building huge boxes in Mississippi. They're doing that daily. But it's been an interesting dynamic really that's really come into play probably in the last 2 years.
Yeah, and I think it's fundamentally the market changed here in Memphis, and kind of call it the mid-90s, where most of Memphis was a small bay industrial market. I mean, that's the Trammell Crow, the Weston companies. I mean, that was the kind of product they were building, and there was a fundamental shift to the big bombers, and that's why, and Memphis is essentially, I mean, there aren't many development sites left in Memphis. So was kind of the move to the North Mississippi market. And as Jeb said, I mean, it's been dominated by the bigger guys. They go in, buy large tracts of land, and they build multiple buildings, and they're 500,000 to 1 million square feet. I think what also has driven that is sort of the kind of border wars we're having with Mississippi from an incentive standpoint. They're very aggressive. It has a very, very sort of a much easier process through going through the pilot process in Mississippi. And so, and property taxes are much lower. So if your tenant, your user's cost of occupancy is $4 in Memphis, and they're going to look at a $4 cost of occupancy in North Mississippi, those developers have about a 15-cent advantage per square foot to their net number because taxes are so much lower. It allows them to get a little bit more aggressive on the rate, but they can, but you know, all the new development is taking place in that North Mississippi market.
And I'm keeping an eye on our time. So Todd, I'm going to let you talk a little bit about what you're seeing on the industrial side, and then we'll move to retail.
Well, we love working on industrial because everybody's in a good mood. You know, there's plenty of data there. Obviously, there's with the development, tenants moving in, deals are being done, and there's transactional velocity. I mean, there are deals being done. You know, COVID is not in play. I mean, so we've seen a lot of positive things there. Of the food groups we're talking about today, industrial is the one sector that we continue to make upward market condition adjustments in many cases if it's in the A and B sector. And you know, it's an easy thing for us to do right now. It's there's not as much hair on these industrial deals as there are on these other properties that we run to on a day-to-day basis.
Okay, now I said I feel like we're riding the roller coaster, and normally I would say that we started with office and climbed on up into the industrial, and now we're going back down to retail. Although I will say there is Shawn Massey always paints the most beautiful picture of and tells us where the positive sparks are in retail. So I'll start with the question to you, Shawn, which I know the answer you're going to give me is retail dead.
Retail, and I'm always the mentor. I'm a little like to be optimistic, but I do see positives going on. But retail for the last 60 years has been evolving. We're going to see that same acceleration in the next 12 to 24 months, where retail evolves even more than it did the previous 60 years. It's changing. I mean, the numbers yesterday, 11,000 stores closed and are going to close in 2020, 40 retail bankruptcies. But people still love to shop and they want the experience. COVID has affected that, but COVID just accelerated some of these closings. They weren't the cause of these closings. Take Amazon. Everybody says Amazon killed retail. Amazon really didn't kill retail. They're going to open 2,500 stores in 2020, retail stores, bricks and mortar. They're going to open another 2,500 stores in 2021, bricks and mortar. They've become one of the most fastest expanding bricks and mortar retailer. They've made those retailers better. They to compete with somebody delivering a package to your door and order online, they have to give you a better experience, a better service. And a lot of retailers have moved, the bricks and mortar retailers have moved to the omni-channel market where they're selling online. Article in the paper this morning in Memphis, they see the FedEx and UPS hubs see the largest influx of small businesses selling from the bricks and mortar shop around the country. So it's not dead, it's just different, and it's going to evolve. And the retail that we saw in the 80s with big boxes might not be there in the next decade, but we're going to have retail, we're going to have environments that people love to go to.
So I just talked to a couple of big box retailers who are saying that any store they build in the future is going to be smaller. Is that the trend that you're seeing generally for retailers?
That is the trend. I mean, we have a large number of transactions that are going to take place. Those retailers will be smaller. They will become more of like, let's go in and look at the television, but you're not going to leave with the television out of the store. You're going to see it, you're going to feel it, you're going to have a salesman or a salesperson talk to you about it. You're going to buy it, and then it's going to be delivered to your house. So they can contract and go and see the fulfillment center. Retail has been the greatest thing for an industrial because all those fulfillment centers are retailers trying to get that last mile, and they kind of work together. And you're going to see a lot more omni-channel, and they will get smaller, but it's not, retail itself is not going away.
So how do you see retail evolving over the next 12 to 24 months?
I mean, let's take the retailer and then restaurant, because I have kind of two categories. and we kind of clump them together. It's really like retail, restaurants, and really hospitality. On the retail, the general retailer, we're going to see smaller stores. I mean, we just talked about that. We're going to see parking lots of shopping centers reimagined. We've always designed our parking lots of our shopping centers for Christmas rush this week coming up. We don't need that. There's a lot of times we're seeing apartment buildings, storage units being put into parking lots. And so you're going to see a lot of parking lots reimagined. You're going to see a lot more, like I said, Amazon going into bricks and mortar. There are more and more online retailers that understand the benefit of having a bricks and mortar store and how that can lift both their bricks and mortar sales and their online sales. I mean, Orvis, Bonobos, those type of stores. That leads into called omni-channel retailing, where you can buy it at a store, return it online, buy it online, return it at a store, whatever the customer wants, which is really important. Rise in pop-up retail, like Todd was saying about shorter term leases, we're going to see some development of small spaces that are leased out on a 6-month to a year basis to allow the retailer to kind of become an incubator. We really don't have that in Memphis, but I know a couple of new large projects where we're actually building in pop-up space as a permanent pop-ups. Curbside delivery. I mean, if you feel uncomfortable with COVID and wanting to go to the store, that retailer will let you buy it online, pay for it online, and walk it out to your car for you. That's something that we had not seen. Cashless purchases, kind of that curbside delivery. We're going to see more mixed-use retail that has an industrial or self-storage fulfillment. We have big retailers that closed that are being backfilled by Amazon delivery stations or self-storage facilities, and more convenience stores. If one thing that's really popped up in Memphis is you can't find sites for convenience stores, and there's so many people competing on that. Now, from a restaurant point of view, they've been hit hard. I mean, especially the casual dining restaurants, those that have drive-throughs sometimes are actually excelling, but we're going to see some things in the past with existing buildings, percentage rent leases. Obviously, that curbside delivery that worked for a retailer is not going away after COVID. People love to pull up, get their meal, and have somebody bring it to their car and take it home. We're eating at home. That's going to be a long-term trend. App-driven cashless transactions were on that part. Menus, if any of you have been in a restaurant recently, you don't see a menu anymore. You take a QR code, you flash your phone on that part.
My eyes love that because you can expand it. I don't need my glasses.
You expand it, you go from there. In large patios, we're going to really see, really reimagine how patios will work in Memphis. We've never been a patio town, but now with COVID and after COVID, people want to see it. Ghost kitchens, we just had our first signing of a ghost kitchen facility on Summer Avenue. And then innovative drive-thrus. I mean, everybody would love to be Chick-fil-A. They know how to do it best, but a lot of that innovation is taking place with other QSRs. So those are just some of the changes that are permanent, but they were going to happen anyway, and COVID just accelerated them.
Well, and Shawn, you've actually told me that was something that surprised me, that retail is actually expanding in Memphis.
I mean, I've talked to some of my peers at the other companies, but just taking a little research of published deals, April, May, very slow. Things were closing. We were working out deals, but I know over 50 plus local tenants have expanded between June and November in Memphis. And that number is probably half of what I only did what was published in local papers and names. I know 30 national tenants have opened or expanded in Memphis since June to November. I know our company has done 30, TSCG has done 30 plus transactions, and we're about to announce a bunch of more transactions with tenants that are signing LOIs going forward. Has it been a banner year? No, it's been an average year. And we can take average like we did in 2009, 2010, but retailers are expanding. They're looking for opportunity. I have a number of restaurants, both in town and out of town, that are saying, hey, when those restaurants close, we want those spaces. We've had retailers like Feeling Memphis and Cheryl Peschke expand their boutiques. And the interesting part, all those retailers that are expanding outside of food have an omni-channel presence.
That's interesting. Tell me about some of the big projects that are going on in Memphis that have retail components.
First one, it was fortunate. The Lake District started construction back in January pre-COVID. It's delivering. The first tenant's going to open first part of January. Starbucks going to open there. It has a little over 100,000 square feet in its first phase, and more coming in its second phase. It's pretty much almost 100% leased, doing well. It's part of a 162-acre mixed-use project. Silo Square down in South Haven, great project, and they're delivering space almost every day now. They fortunately, these both projects, the lenders were already in bed with them and had to move forward. Liberty Park, we just announced a large entertainment retailer, 40,000 square feet, coming out of Texas, coming here. They were excited about it. We're at Liberty Park, all the retailers know that in 2022, when it delivers, COVID's going to be under control. They finally feel comfortable that's going to happen. Central Yards. So we still have projects going. Some projects that didn't start construction are going to have to wait to 2021 till the vaccine happens, where the lenders feel comfortable and the developers feel comfortable moving forward.
Well, and I love the Liberty Park thing. For those that don't know, it's a development that's based with youth sports, but it's a mixed use development that's going into the middle of the city near the Liberty Bowl. And I think that's something really exciting for Memphis. Those youth sports are such drivers of, there's hotels and apartments and all sorts of retail space that's going to be in that development that I think is going to be great. Okay, it's my understanding that you view hotel as retail. How is that sector doing? That's also one near and dear to my heart.
I love the travel, so it's near and dear to my heart, and I love to see places. Memphis has actually done a little better than national. Our occupancies are not at the level it was pre-COVID, but they're getting close. The ADR, average daily rate, is a little lower, but I mean, I'm working with a couple of hotel developers that are very active trying to find sites. But the Grand Hyatt was just announced by the Carlyle Corporation. Hyatt-centric, again, Carlyle close to opening, captioned by Hyatt, was another one at the One Beale project. The Memphian is about to open on Overton Square, which is going to be amazing. Liberty Park, we have Capstone out of Washington that's going to open 2 hotels. The Canopy Hotel opened with curfew downtown by the ballpark. And I think Memphis is not as bad as the rest of the country. It has room for growth. Another one that opened was True in West Memphis, and they're running at what their performer was prior to COVID. So they're excited about it.
That's what we're seeing from our clients, our hotel clients, is that actually Memphis is fairly solid and stable, which is always what I say about Memphis, is you can count on it being pretty solid in all areas. We're not big highs, big lows, but it's a very solid market for hotels.
We've never had a boom period. I mean, prior to COVID, we had 17 hotels downtown announced and 46 hotels throughout the city. Maybe that might get us to a point where we would have been in trouble, but because we're a little slower and lack than the rest of the country, we're weathering the storm a little better. So
well, and before we leave, let's finish up with one question about what basically originally defines Memphis, and that's entertainment. Being the music city that we are, talk to me a little bit about entertainment retail.
I'm going to credit my opinion about entertainment retail to my partner, Dustin Jones. COVID is creating this pent-up demand for experiences, for people to get out. Everybody just wants to bust out of the door, COVID vaccine work, go to these entertainment places, bowl, trampoline park. My 9-year-old boy, Matt, he just says, is urban air over COVID yet? Can we go? If you look back at history, in the Spanish flu, we had the roaring 20s right after it. I think you're going to see, once we get comfortable with COVID, whether it's herd immunity, the vaccines work, enough people have taken it, I think you're going to see this renaissance for entertainment and getting out, whether it's outdoor places or indoor places like High Five and Mouthless Cinema, who I know in the paper recently talked about struggles. But I think people are going to want to go there, and retailers are going to deliver that experience. And we're going to see some great times for entertainment retailers by end of 2021, 2022. So let's see that renaissance and take place, and we'll be the roaring 20s again.
I have to admit, I'm ready to actually spend a lot of money on popcorn and go see a movie and go to a concert. So I agree with you on that one. I think everybody's ready to get out and do things. To wrap up, what I kind of would like all of you to do is let's go back around the circle again and tell me what you think are some of the things that people should be looking out for come 2021. And I'll start with you, Todd.
Great.
Sorry.
Well, I think to come out of the retail side of it, I think what we see, and I think going forward, is investors on the retail side are going to look to that tenant mix. They're going to try to see if that mix is weighted to essential services, and also going to underwrite the cash flow pretty rigidly. I do think there's going to continue to be money in the real estate market, and continue to look to Memphis as a second tier market where our pricing and potential for upside is going to be greater than some of these first tier markets. We are very positive in looking into 2021. We think we are on the other side of this and going to start coming out of it. And we do think that there's going to be a lot of upside potential if the government will get out of the way.
As always. Jeb, next.
So I think an interesting trend to look for, just to keep an eye on in office, is the, companies calling people back to work as we get more comfortable, continue to get more comfortable with COVID, vaccinations, et cetera. And then beyond that, how the office environment will innovate and deploy their employees to both create a good balance of personal connectivity that builds corporate culture and allows for mentorship and allows for the spontaneous ideas to manifest, versus the flexibility of remote workplace. That'll be an interesting trend to keep an eye on as we get into mid 21, toward the end of 21, and then into 22. Industrial, I think one of the I think it'll be interesting to see how this infill development continues, and then also development in other parts of the metro area that haven't seen as much bigger box development. What we call the Northeast submarket, I-40 corridor, that's predominantly been smaller service center, smaller warehouse. Will that start to build some of the bigger box developers look to there? I know that at least one's taken a position up there. So how does that continue to grow? And then are there areas of town that really need to be repurposed? Their highest and best use 30 years ago was retail, and maybe that needs to transition to maybe retail and some office. Maybe that needs to transition to industrial. And how does and will that happen? Rents are such now that you would think that might make a case for it to pencil out to transition to industrial developments. But those are the two things, or the things in those two segments I think I'd keep an eye on.
Dane?
Yeah, I mean, really, there are kind of three trends that we're following right now. And really, the first one's kind of investment activity. We think there's going to be a significant rise in it in 2021. Currently, there's a bid-ask, disconnect between sellers and buyers, and investment sales in general have been off in 2020 for all the reasons that we've stated. But the one thing that's true, there's a massive amount of capital out there sitting on the sidelines, kind of just waiting to deploy it. And we think that 2021 is going to be sort of a good year for that. The other one, it's kind of tied together. We think there's going to be an increase in cap rates to a certain degree. It's going to be small, with the exception of industrial. I think industrial keeps, sort of on the trajectory and the path that it's on. But as you see all these residents leaving New York and California, and these, the impact it's going to have to some of these major markets, and who knows exactly what that's going to look like. But and then on top of that, as the GDP continues to increase, we continue to sort of, to gain back the jobs that we've lost. And so the economy starts to improve. There's going to be a little bit of pressure on interest rates, and cap rates generally, for the most part, will track, long-term rates. So that's another thing that we're going to watch. But I think the most interesting thing that everyone's been waiting for these COVID discounts on property values, and they just really haven't been there. Even though there are plenty of publications out there, and you can track. I mean, I think industrial, single-family rentals, manufactured housing, and maybe some life science stuff is really the only sectors that have seen even just a nominal increase in values. Everything else kind of falls off the board. And I think as an aggregate, we're probably 10 to 15% off where we were pre-COVID. But the distress, and we do a lot of servicer work, and we're talking to lenders all the time, and they have ramped up, and they have been just inundated with, loan workouts and potential foreclosures, and their servicing activity has just increased, substantially in the last, 6 months or so. And I think we have seen more, because I think it's going to be a much tighter window than what we saw in the last recession, where they had kind of years to work those things out. It's going to be a little bit more concentrated. And so we think there's going to be a substantial amount of distressed activity in the first couple of quarters, and maybe bleeding into the third quarter of 2021. And then, hopefully that would have all cleared by then. We're back to normal. But those are kind of the three trends that we've been watching.
Shawn?
Kind of looking at, I'll start off with store closings, which I really hate to talk about, but I think COVID has accelerated those retailers that were going to close anyway. I think 2021, we're going to see both a net new stores opening back to that 2,500 stores nationwide, which is going to be good. We do have a problem in Memphis, and it's hard to say. We only have a 4.6% vacancy rate. A lot of that is concentrated in areas where there's not growth. In the good submarkets, the strong submarkets, we're less than 3%. We can't find space for some retailers. That will be alleviated a little bit there's 21 projects in Memphis under construction, bring about 500,000 square feet, which is like a drop in a bucket for industrial, but it's a welcome sign for us in the retail brokerage side. The big thing we have to look at is how many retailers and restaurants are trying to hold on through the Christmas season, and are we going to have a lot of retailers or restaurants or some marginal number close their doors after the end of the year? We don't know that. We expected it earlier. People have held on. It hasn't helped increased our vacancy rate to date. The next 2 months are going to be really important on the retail side. But I do see 2021 being a very good retail year because of the acceleration of those stores have closed. Now we can get back to business with good quality retailers that provide an experience.
Well, and I'll sound like the commercial for the chamber, but I do think that Memphis is a place that people should look at. Not only is it a great city, there's a lot of opportunity here. for, I think, people from outside of the community to come in, to look, to invest, to look to relocate their companies. I know they're paying me, I mean, I swear. But really, I do believe that. I'm not a Memphis native originally, but it's a wonderful place to live. So I am glad that our sponsor gave us the opportunity to present the case for Memphis and talk about what we see going on here. I do see one question for Shawn, and then if there are any other questions, Shawn, do you see that, or you want me to read it?
Yeah, I can see it. Can I recap retail developments that you mentioned and do a recap of their exact locations? I'll start a Northeast Lake District project is under construction, delivering space next month. First retailer opening next month. The Falls development in Arlington will deliver space mid 2021. The marketplace at Raleigh, and we're having development in the Raleigh, Fraser, Whitehaven. We're under construction in marketplace at Raleigh at Yale and Austin P. We're going to deliver space in about 4 months. Starbucks and another tenant. Liberty Park is going to come on third quarter of 2022. I talked with Kevin Adams yesterday, and I see the walk moving forward. And there's a number of, Silo Square is already delivered. They're going to deliver future phases in 2021. There's going to be a lot of infill development that are 1 or 2 tenants that are single tenant net lease deals that will happen and will be announced. So we're not going to see the big boxes that we saw, but we're going to see very concentrated mixed use, very strategically located projects that are developing. And those are not, they're developing in Whitehaven, they're developing in Fraser, they're developing in Raleigh, as well as Germantown, Collierville. So the whole rising tide of the city is moving forward.
Todd, do I kick it back to you now? Todd, are you there? I know. So our sponsor, I wanted to thank all of the panelists for lending their expertise to this group. It was fun for me, and I hope that you guys all learned something about what's happening here in Memphis.
Excellent panel. Thank you, Memphis. Looking forward to being in person next year. Have a wonderful time, everybody. Thank you.
Thanks, Todd.
Thanks, guys.
Happy holidays.
Enjoyed it.